In 2022, I realized I need to generate consistent cash flow from the market after a major bear market, the crash. This led me to develop the basic monthly passive income strategy and also the advanced monthly passive income strategy. And after using it for 8 months with the advanced monthly passive income strategy, I'm close to 5 times my previous salary as an accountant. Here's what I learned after 6 months of using the strategy, and these are the top 10 tips. And if you stay till the end, I also have a bonus tip for you as well. Tip number 1. With the advanced monthly passive income strategy, it is possible to generate 4 to 5% return per month, but if you're starting out as a beginner, just aim for 3% a month should be fine. Tip number 2. Usually when you invest using the monthly passive income strategy, you need around 8 trades to be considered diversified. So around 2 trades a week is good enough. Tip number 3. Now the probability of success comes down to how deep your strike price is. And I'm talking about using cover calls or selling puts or any advanced strategy to generate income. The deeper your strike, the higher the probability of success. Tip number 4. To further improve your odds of success, you should only invest when there is positive momentum. And you want to avoid bouncing up from negative momentum to just a flat trend. So you want positive momentum when you're investing. Tip number 5. When you're investing using the monthly passive income strategy, I usually recommend people to just start with around $20,000. And you want to use only one contract for the first couple of trades. So then you get familiar with the process, how your broker works, and how the interface works. Tip number 6. Once you get comfortable with the strategy, it is possible to generate an even higher return by closing the winning trades early and then re-enter into them, either into the same ticker, like the same stock, or you can find another one that has positive momentum as well. Number 7, you must avoid earnings at all costs. Now, when it comes to long-term investing, you want to include earnings because that's where the biggest jumps are. And assuming you select a great company, you get a lot of movement during earnings. But when you're trying to generate monthly passive income from the market, you want to avoid earnings because that's where it also might go against you. So you want to avoid those key volatile periods. Tip number 8. Once you figure out how much income you want, then you can work backwards and figure out how much of your portfolio needs to be allocated to the monthly passive income strategy. And ideally, you want to allocate as little as possible, and then the rest of the portfolio can be invested in S&P 500. And turns out it will be less than you think. Tip number 9. I believe that most people can retire with $150,000 to $300,000 allocated to monthly passive income strategies. And with the advanced monthly passive income strategy, it should take even less capital because of the slightly higher return. And the rest of your capital should be in S&P 500 or a couple of blue chip stocks that you really like. For example, Apple, Microsoft, so on and so forth. And if you're looking to retire with, let's say, $90,000, making 3% a month, then you need approximately $300,000 allocated to monthly passive income to retire. But if you're looking for just an additional $1,000 a month, then you just need $30,000 allocated to monthly passive income, making around 3% a month. Tip number 10. Once you encounter a bull run, you can continue to refresh, meaning exit and re-enter your monthly passive income trade until the price becomes extreme. So this allows you to ride the bull wave and also help generating a higher return as well. Tip number 11, the bonus tip. Now, when it comes to dealing with a losing trade, if you're a beginner, you're just better off closing the losing trade. So it's straightforward. But if you have a little bit more time and you want to minimize your loss, you can wait for a pullback in a shorter time frame, let's say on a daily basis, exit half the position, and then let the hedge position, the put, continue to make profit as the market continue to go down. And this is actually easier said than done, but it is possible. And the key is to wait for that pullback in the shorter time frame first, so then it rides the down wave and give you a higher profit. And with that technique, it is possible to completely eliminate the loss, but you also need to be really good at timing. After getting 8 months or more of data, I'm pretty confident to generate 5 times my income going forward. So What's your favorite tip?
If you're interested in learning more about my monthly passive income strategy and how you can use that to accelerate your retirement and also replace your income, then you can click on the link here or here to attend the free webinar, Invest and Retire with $300,000. And you'll also get an invite to the free investing community called Invest and Retire as well. So my name is Eric, and I'll see you in the next video.